G'day, mate. I appreciate the comment. Once again, got to put some people in their place. Look, this is not a dig at you. I suspect that this is either you've got bad advice from your accountant or you don't understand generally accepted accounting principles and what you can claim a tax deduction on. So, basic accounting around the world is that our income minus our expenses equals our profit, which in fact means that our expenses are tax deductible. Now, in a business, I believe that you own some hospitality venues. You pay GST on certain things. There's some things that are GST exempt. And of course, you collect GST on some of the goods and services that you sell. So if you have paid GST on things, you can claim back that GST on the GST that you have collected. And therefore, it means that you're typically not paying the full 10% GST. You've got an offset for the things that you've incurred along the way. Secondly, the stock that you buy, your cost of goods, if you've got coffee beans that you buy, if you've got inventory that you buy by way of fresh produce, all of these things, all of your expenses are tax deductible, meaning that you produce $1,000 in income. Let's say that you incur $700 in expenses. You do not pay tax on that $700 because it is tax deductible. And then if you end up with a $300 profit, then at the company level, assuming that you run a proprietary limited company, it will be taxed at 25%. If you leave it there in the company, that is the maximum tax that you will pay. If you distribute that to shareholders, depending on your tax structure, you will typically pay top-up tax depending on the marginal tax rate of the entity that you distribute it to. So to say that you cannot claim back your stock that you buy, that you can only claim back new equipment and wages is fundamentally wrong. This does not align with any accounting standards globally. So go back and check. Is your accountant telling you this? And if so, run for the hills and find yourself a new accountant, because if your accountant is telling you that, they deserve to lose their accounting license and they should not practice. If this is just a misconception and a misunderstanding, hopefully this has corrected it, and make sure that you get educated on this stuff. Once again, I talk a lot about this, that there's this narrative that big businesses get all of these tax breaks and they get all of these opportunities that small business owners don't. Sure, there are businesses out there that break and bend the rules, but the vast majority of businesses are held to exactly the same standard. The tax rules are the same for everyone. We have access to the same opportunities that everybody else does. It's just most people don't take advantage of them because they're naive. They don't know. They've never invested the time. And they just prefer to make themselves feel better by pointing the finger and saying, oh, those big bad corporations and taking advantage of the rules and paying no tax. Corporations pay tax if they have profits. They choose to reinvest those profits back into the business in order to minimize their assessable income. For the ones that don't, they pay dividends to their shareholders and pay 30% tax. Go look at the rules. For the people who have tried to use offshore accounting methods in order to minimize their tax liability, they've been caught in initiatives like Project Wickenby and other initiatives that the ATO have done. They don't get off scot-free. The ATO chases them just as much as anybody else who engages in tax evasion. So understand the rules and then play them to your strengths and then benefit from them. Otherwise, be prepared to succumb to the impacts of not knowing. Wish you all the best.